All right, so we're back with common stock dividends. We're going to run through the four different types. First one, most familiar with probably, is the cash dividend. In this case, we're going to deal with the declaration date, date of record, and the payment date. So there's a dividend declared of 50 cents per common share. One thing to remember is that dividends are only paid on shares outstanding. 9,500 shares outstanding. Excuse me. So it's dividends per share times the 9,500. That's where the 47,500 comes from. So on the date of declaration, retained earnings or total stockholders' equity is reduced and liability is increased. On the date of record, there's nothing to do for the corporation. If another corporation owned the stock, they would record a dividend receivable, but we're not doing and dividend revenue, but we're not doing that entry here. We're doing it from the perspective of the company that's declaring the dividend. So no entry required on the date of record. On the payment date, you remove the liability and you credit cash. All right, so net what happens? You reduce stockholders' equity and you reduce an asset. So total stockholders' equity declines and total assets decline. These two just wash out. The payable just washes out. Property dividend. So you're going to reduce total assets, and the thing that's you have to keep track of here is that on the declaration date, the company has committed to removing or disposing of the property. So the company must record a gain or a loss if the item's held at cost on the declaration date. So we have an item with a fair value of 2,000 and a book value of 800. The first thing to notice is that the retained earnings is reduced by the fair value on the declaration date. And the land is marked up from 800 to 2,000. So you would have a land account that would look like this. 800 plus the 1,200 is 2,000. Okay. And you would record a gain on the declaration date. Date of record, nothing's done again. And on the payment date, payment is the transfer. We remove the property dividend payable and we remove the fair value of the land. Okay. So that's a property dividend. The next type of dividend is a liquidating dividend. The unique feature of the liquidating dividend is that in addition to reducing a retained earnings account, a paid-in capital or contributed capital account must be reduced as well. So, Plum Creek Timber declares a $10 million cash dividend, and they note that $3 million is a return of capital. So, this is a real company. Why do we have these? So, the company buys a tree, or a bunch of trees, and what they're saying here is, you gave us the money to buy the tree. The trees cost $3 million. Now we're cutting the trees down and we're shipping them out, and getting paid $10 million for them. So $7 million after, and then we're getting paid some amount after all the expenses. The profit associated with those $3 million of trees is $7 million. So we're gonna return $7 million in profit and $3 million of your own money. Think of it this way: if you had a bond, if the bond was 100,000 and they pay you 100,000 and over the life, 50,000 in interest, well, 100,000 of it's just a return of your own contributed capital, your own capital. And so that's what this type of dividend is trying to distinguish. So there are some companies that are set up in such a way where they liquidate their capital assets in an orderly manner and return those to the investors. Okay? And this is one of those type of companies. So there's companies like pipeline companies, companies that own oil rights and things like that. They might put them in a structure like this and liquidate the company over time. All right, and then on the payment, it's just cash and remove the dividend payable. Okay, so the dividend payable cancels. You have a total reduction in stockholders' equity of 10 million, total reduction in total assets of 10 million. The difference with the liquidating dividend is that it's split across retained earnings and paid in capital. common stock. Excuse me here a second. Okay. I'm going to stop here and we're going to get into the stock dividend next. It's a totally different kind of dividend. And we just covered cash dividend, property dividend, liquidating dividend. All of them reduce total assets. All of them reduce total stockholders' equity. That's not true of the stock dividend, so we're going to talk about it separately.